I've shared trend trading strategies before, but never like this. In this video, I've combined all of my most effective trend trading strategies from all my videos so that you can start implementing them in your trading. Let's get started. Every chart trend needs two types of participants in order for the trend to move, and those participants are buyers and sellers. For example, for a bullish trend to happen, you need a little bit more buyers than sellers. When that is the case, then you'll get a nice healthy uptrend. And for the bearish trend, you need a little bit more sellers than buyers. And also for this, you will see a nice healthy downtrend. These are the most powerful types of trends. Within each trend, there are qualities that make it higher probability than the other. Let's talk about those qualities in detail. These are one of the most powerful trend swings in the market, but this one is the best. And let's dig deeper as to why it is the best compared to the other ones. Take note of these important aspects about this trend swing. The candle bars are all in one color, which means that they are so powerful that there's not even a chance for a slight pullback. This is a sign that big players are behind this trend swing. When there is a mix of different types of candles in a trend swing, that means that there are quite a bit of deeper pullbacks within that particular trend swing, which you can identify when you go to a smaller time frame, which suggests that that particular trend is not powerful enough. Also notice that these candles are taller in size compared to normal candles, and also they don't have longer wicks or tails, which means that if you again go to a smaller time frame, you will see a very small pullback, and that means that bigger players are very confident with this trend direction. The next important aspect is to validate that this particular trend is the real one. The best way to validate it is to look at its pullback. The pullback should almost be flat, struggling a lot compared to the trend swing, and it should have a very short set of candles, and that means that bigger players are still holding onto this trend and are not pulling out at any time soon, which makes it a very high probability potential trade for you. Another most important confluence to validate the trend swing is using volume indicator. The volume bars should be very strong and pop above the moving average during the push of the trend swing, which indicates that bigger players are part of it. And the volume bars should be below the moving average during the struggling pullback, which indicates that bigger players are not part of that trend pullback. Here is one of the most important signals you don't want to see in this particular trend. When the trend swing starts off powerful, as we discussed above, and then ends up with a struggling end of a trend swing like this. This means that big players started off believing in this trend, but as the trend goes, they realize or notice that there is something wrong or worrying about this trend, to a point that they are pulling out some of their money bit by bit. When they are doing that, in most cases, the trend will end up dying and turning around to the opposite direction, which is not what you want to see happening. Very important, you need to choose the best type of trend to trade. Let me explain. Markets have a lot of different types of trends, and depending which trend type you choose, it will determine whether your trade will win or not win. For example, these trends have certain qualities that any trader should pay attention to and choose the correct one from. So here is the correct way to choose the best trend to trade. You need a consistent indicator to use in order to get consistent results. The indicator I'm referring to is the exponential moving average indicator, which is also known as EMA indicator, which you just need to add to your chart. Here is how. We want two exponential moving averages. So go to your trading view platform, then indicators, and search for moving average exponential. Then on the inputs tab, set the length to 20 and set the source to high, and also on the style tab, set the color to green. Next, add the second moving average. Set the length to 20 and set the source to low, and also on the style tab, change the color to red so that you can know the difference between the two. This strategy works best on 1 hour time frame. Step 2. You need to be able to read and understand the rules of this type of trend correctly. The reason for choosing 20 EMA is so that we get an early warning should the market tries to turn around or do a range or consolidation. Also, another reason is that 20 EMA means that the trend is fresh and has a very high probability of going further than you think. That is why reading it correctly is very important, and here is how to read it. The trend should originate from a consolidation, like so, and it should stay above the 20 EMAs and only retrace and resume from or between the two EMA lines, like so. And very important, it should not break them. If the price breaks the 220 EMA lines, that means that the trend is not strong enough to give us high probability trades, and it will not go further unless it does a consolidation and then resume with a new trend that respects the 20 EMA lines. Step 3. Here comes the killer entry strategy for timing your trade entries. Notice that the price always moves away from the EMA lines and always comes back to them before moving away again. But very important, the starting point is that the price should break out of the ranging or consolidating price, as that is the best way to increase our probability that the trend is resuming. Then the price should aggressively move away from the EMA with strong volume that pops above the volume moving average. And then the pullback to the EMA should be very weak and its volume should be within the volume moving average. And also when you compare the swing and the pullback legs, the pullback should visually be struggling a lot compared to the swing. Then when the price gets to the EMA lines area, look for any signal that suggests that the price is about to turn. Such signals are candlestick, support and resistance, etc. and then enter the trade. So usually trends go up or down in this fashion: swing then pullback, swing then pullback. So as traders, we want to know whether or not the trend is going to continue after that pullback. Here is how you will know for sure. First, make sure that the big players are behind the swing. So basically when you see the swing, make sure that the volume bar or bars pop out of the MA area. Then also make sure that during the pullback, the volume bar or bars are within the MA area, which means that big players are not part of that trend, which also means that their big money is still in that swing they have started, which also means that the trend is still going. When the pullback has the volume popped out of the MA area, you must know that the big player is no longer interested in that trend, and you must also get out of the trade. When everything ticks all the boxes, that is when the swing has the volume popped out of the MA and the pullback has the volume bars within the MA area, then here is how you decide when to enter the trade. First, check support and resistance, then look for a candlestick signal in that support and resistance zone, and that signal should have the volume behind it, then enter the trade. Let's get into using volume indicator correctly to identify trend continuation. So there's one important signal that tells traders about a solid trend continuation that is potentially coming, and this signal has to happen at the beginning of the trend, and once it happens correctly, then you can confirm that you have a solid trend to make money out of. And this particular signal is a range break. Basically, the start of a solid trend should be a range break. But there is a very specific way of which the range should break in order to signal a solid trend continuation, and here's how it should happen. The first thing to confirm is that there is evidence of ranging market, and the second thing is that the trend should break off that range with high volume, which stands out compared to the surrounding volume bars, and also the candlesticks should show a strong momentum too. If you can confirm all these, then you have a solid trend ahead of you. One thing you should understand about the nature of the trend to master trend continuation is that the trend should have pauses, which we call pullbacks, and these pullbacks should occur in a specific way in order for us to get clues about trend continuation. And those clues will help us decide if we should close our trade positions or not. And here are those clues. The first clue is that the pullback should have low volume, which means that the volume bars should be within the cloud shaded area. And the second clue is that candlesticks should show weakness. And the third clue is that the pullback should not be steep, rather it should be almost flat. If all these clues are true, then hold on to your trade position because the trend is still going to continue.